And the idea was, as the credit improves of our company and as people get more comfortable with Bitcoin, as the price of Bitcoin goes up, that could go from 85 to 100 to 110 to 120 to 150. It could go to 200. So it could trade way up above par because it's totally perpetual. And that sets the cost of capital for our company. Like that is the investment grade.
Yeah.
If you're saying what would be the long-term, the 30-year bond rate for an investment grade Bitcoin company, that's setting that rate by the market right now. Because we bought all this Bitcoin, that means that Strife would be 50x over collateralized.
Yeah.
So it's actually good for the credit, good for the converts, good for the equity, good for Bitcoin, and then good for the stride holders, right? So it's kind of the flywheel.
MicroStrategy isn't just buying Bitcoin, they're turning it into a financial powerhouse that generates yield, strengthens credit, and reshapes corporate finance. Michael Saylor, co-founder and executive chairman of MicroStrategy, remains a key figure in Bitcoin's institutional adoption. With Bitcoin trading near $117,000, analysts suggest the price could reach $194,846 within 3 months, a potential 66% upside. Against this bullish outlook, Saylor has crafted innovative financial instruments that strengthen MicroStrategy's credit while expanding its Bitcoin position. The first, STRK, STRK, offered an 8% dividend at par, equity upside through conversion into MicroStrategy shares, and downside protection. It appealed to investors seeking yield with growth potential. Strife, STRF, followed, paying a 10% perpetual dividend and sitting senior in the capital stack, giving credit investors greater security. To meet demand for higher yield, the company launched Stride, STRD, a junior instrument offering 12.7%, riskier but highly popular, with issuance twice the size of Strife. Finally, Stretch, STRC, targeted investors seeking yield with stability, designed to trade around par value with low volatility. Saylor describes these instruments as a flywheel that improves credit quality, rewards investors, scales Bitcoin purchases, and strengthens equity. Alongside these moves, MicroStrategy, now branded Strategy, continues accumulating Bitcoin, cementing its role as the leading corporate vehicle for the asset. As equity markets hit record highs, Bitcoin's deeper integration into corporate finance signals even greater upside ahead. We're still in the early innings, Bitcoin's real run is yet to come. Hit subscribe and turn on notifications so you don't miss the next explosive move.
We created 4 different instruments so far. The first one we created was Strike. And the idea with Strike was, let's give people a dividend, 8% at par. Let's make it par value $100, pay an 8% dividend stream, and then give people a conversion right to 1/10 of a share of MSTR so that, if the strategy stock is trading at $350, you have $35 worth of equity inside that instrument, right? So that was like, have some equity upside, have downside protection via the liquidation preference, and then have continuing income via the dividend. So that was a very simple, well, not a simple instrument, but an idea, which is I want the upside with very little downside, and I want yield while I'm waiting. The second instrument we created was Strife, STRF, and that was a 10% dividend yield at par. So we're going to pay 10% interest in a way, or 10% yield on a $100 instrument forever. Okay, a 100-year bond that pays 10% yield, right? You just don't see that very often. And we made that senior in the capital structure. So we basically put as part of the security, one of the covenants in the security is we won't sell any other preferred stock senior to Strife. So Strife will always be first in preference, senior long duration credit. And that's very comforting to credit investors who are very risk averse. Because they would say, well, I'm going to get paid before everybody else. So that makes my principal much better protected. And that gives me, in theory, that's credit positive. It gives it a better credit rating in their eyes. So we sold that, and that traded above par. So that traded way up. So it was yield. And the idea was, as the credit improves of our company, and as people get more comfortable with Bitcoin, as the price of Bitcoin goes up, that could go from 85 to 100 to 110 to 120 to 150. It could go to 200. So it could trade way up above par. because it's totally perpetual. And that sets the cost of capital for our company. Like that is the investment grade.
Yeah.
If you're saying what would be the long-term, the 30-year bond rate for an investment grade Bitcoin company, that's setting that rate by the market right now. So then the third thing we did was we created Stride, STRD. And the idea of Stride is, what if we just sold Strife, but let's just take away the penalty clause and the cumulative effect? We literally took out like 2 clauses. And it's the same thing. It's still 10% at par. But you would say, well, this is junior long-term credit, not senior. So the senior one looks more bond-like, and you've got not a bond, but it looks less risky.
Less risky, higher in the capital stack.
Yeah, higher in the capital stack. And this looks more risky,
More
lower.
like a junk.
It's just right above the equity.
Right.
So we sold that, and that trades with an effective yield of 12.7%, whereas Strife trades with an effective yield of 9%. So a 370 basis point credit spread appeared between the least risky and the most risky. And people say, and ironically, the Stride deal was twice as successful as Strife. It was twice as big. And people would say, well, why would someone want to buy that when it doesn't have a cumulative right, it doesn't have penalties, and it's junior? And the answer is because they believe in Bitcoin and they trust the company.
Yep.
And they want the yield, right? Well, you would rather have 12.7% in your bank account than 9%. And so the issue is, do you trust your bank? If, at some point, if you trust your bank and they offer you 12 instead of 9, then you're going to do that. So now who else trusts the company? The equity holders, right? Just like who trusts Bitcoin? The Bitcoin holders.
Yeah.
At some point, you decide what you're going to trust. And this is an instrument that provided 2 benefits. Well, many benefits. One benefit is it gives people that believe in the company and believe in Bitcoin the ability to get paid 12.7% dividends. That's great for them. The second is it gives the company the ability to build collateral that's junior to the senior instrument. So it's credit positive. It's good for Strife. It's good for Strike. It's good for everything else. And then it also gives the company a very scalable way to generate leverage to buy Bitcoin, which doesn't have credit risk. So in theory, if there's a market to buy $100 billion of Stride, we could sell $100 billion of Stride and we could lever the company to 90% leverage. And we would buy Bitcoin with it. And that would be good for Bitcoin. That would be good for the equity. If that was good for the equity, that would be good for the equity component of Strike. You see, so it's, and
Flywheel.
Of course, because we bought all this Bitcoin, that means that Strife would be 50x over collateralized. Yeah. So it's actually good for the credit, good for the converts, good for the equity, good for Bitcoin, and then good for the Stride holders, right? So it's kind of the flywheel.
Yep.
And that's why we did the third. And then the last thing we did was stretch. And the idea with stretch was people said, yeah, I'd like to get 10% bank account instead of 5%, but I don't want the volatility. I don't want to think that maybe the principal would trade up $10 or trade down $10 a share. Like if I buy it and it's trading at 110 and then the interest rates change and it trades to 105, I'll have lost 1 year worth of interest or 1 year worth of dividends. So we wanted to find some way to get to $100 and keep this price right around par, right around 100, lowest volatility imaginable, and extract the yield.
Bitcoin isn't just digital gold anymore. It's becoming the backbone of a new era in corporate finance. On Monday, September 8, 2025, MicroStrategy, NASDAQ, Inc., participated in the H.C. Wainwright 27th Annual Global Investment Conference, where founder and chairman Michael Saylor delivered a bold outlook on Bitcoin's role in global finance. Despite MicroStrategy's volatile stock performance, Saylor reiterated his conviction that Bitcoin is not just a speculative asset but digital capital, a foundation for a new era of corporate finance. Saylor argued that traditional institutions, whether governments, banks, or corporations, cannot sustainably deliver yields above 10%. Strong governments deliberately keep yields low, weak governments collapse under inflation, and most corporations focus on stock buybacks rather than issuing high-yield credit. Bitcoin, however, changes this dynamic. With his forecast of 29% annual appreciation over the next 2 decades, Saylor highlighted that Bitcoin consistently outpaces the S&P 500 in the cost of capital. By using Bitcoin as collateral, companies can issue digital credit that is over-collateralized, 5x to 10x stronger than investment-grade debt, while still offering higher yields. This structure, Saylor noted, gives investors access to domesticated Bitcoin with yield and lower volatility, while equity holders capture amplified upside. Ultimately, transforming Bitcoin into yield-bearing credit and leveraged equity creates a flywheel effect, channeling capital into the Bitcoin ecosystem and accelerating adoption worldwide. Let's get back to the interview.
Your bank won't, a company won't, a government won't, no mortgage-backed security issuer will.
And I think it's important to share why not? Why can't we get that kind of rate outside of what you're doing?
Yeah, it's because no company has a good enough business that they can be confident that they can generate returns north of 10% a year ad infinitum. Running a company is hard, right? Because no one with a home can afford to pay that. That's another reason. So at the end of the day, and because no government that has a strong position wants to, right? The strong governments that run the world that are stable don't wish to. They wish to pay you much less. And the weak governments, they are forced to pay more, but their currencies are collapsing and their government is collapsing. So you can't find a national creditor that would pay that rate. You can't, and most corporations, corporate finance strategy is not to issue credit and make it good. Their strategy is to avoid credit, to buy back their stock, right?
That's the conventional method.
They're very conventional. So what we discovered is Bitcoin is digital capital. Bitcoin is going up faster than the S&P forever, right? Once you actually acknowledge that Bitcoin is appreciating more than the S&P forever, and my forecast is it appreciates about 29% a year for the next 21 years, and I've shared that with the community. But you could have any forecast. But if Bitcoin is an asset and it's appreciating, then you can create credit collateralized by that appreciating asset. So Bitcoin's digital capital appreciating faster than the cost of capital. The cost of capital is the S&P 500 return. And then credit written against it or issued against it is digital credit. And the digital credit can have longer duration or it can have short duration. It can have higher yields. It can be in any currency because Bitcoin is a stronger currency, right? One of the keys in the credit market is if you're going to issue a credit instrument in a currency, you want it to be weaker than the collateral you hold. So if you issue the credit in a currency which is stronger than the currency you hold, you'll be upside down and you'll go bankrupt, right? And this happens, for example, when they borrow in dollars and they live in a country where the currency collapses, they're bankrupted, right? So what you want to do is you want to issue the credit in these other currencies. And so we can issue credit in yen or francs or Swiss francs or in euros or in dollars because all of those currencies are weaker than the Bitcoin currency, right? And so we discovered that we could take on any kind of currency risk. We can we can offer higher yields. We can offer yields like a distressed debt, like a company going out of business, but we can then over-collateralize them so that they look better than an investment grade. Investment grade companies in the United States aren't 2x or 3x over-collateralized. We can create 5, 6, 7, 8, 10x over-collateralized credit. So we can create credit which is less risky. We can create durations which are longer. We can create yields that are higher. And because we can create those in perpetual instruments, we can take them public. And if we take them public, then they'll have more liquidity. And so the idea is, give me something which is smarter, faster, stronger than everything else, right? Make it more liquid, make it longer duration, make it, more collateralized, make it less risky, make it higher yielding, better performing. And the opportunity of any kind of Bitcoin treasury company is you have the world's best collateral. You have Bitcoin digital capital. If you issue digital credit, you'll have the world's best credit. And that credit will then create amplification for the equity, because whatever volatility and whatever performance you strip off of the credit will accrue to the common stock shareholders. And so you create amplified Bitcoin in your equity. You create domesticated, low risk, low volatility Bitcoin with yield. That thing that doesn't have cash flows, we give it cash flows, right? I mean, The irony, of course, is, a lot of these traditional credit investors, right? The people that want to invest in cash flows, they'll invest in the bonds, or they'll invest in the bonds or the equity of a company which is losing money or that has cash flows that don't even meet the cash flows that they're collecting, but at least it's cash flows. So what we're doing is we're giving Bitcoin cash flow, we're making it credit. That way it goes into credit indexes. And then we're creating equity, which outperforms, and that goes into equity indexes. And both of those two things raise capital. They're both gateways for capital. The capital flows into the Bitcoin ecosystem, and then we buy Bitcoin, and that finances and powers up the Bitcoin network.
MicroStrategy's aggressive accumulation of nearly 640,000 Bitcoin, now worth over $70 billion, alongside $47 billion raised in equity over 5 years, reflects the growing alignment between corporate finance and digital assets. With forecasts placing the crypto industry at $10 to $20 trillion by 2028, Bitcoin is increasingly seen as more than a store of value. It is emerging as a foundation for yield-bearing credit, equity amplification, and global capital flows. As traditional institutions struggle to match such performance, Bitcoin's role as digital capital positions it to reshape financial markets, driving adoption and innovation at a scale not seen in modern finance. Could Bitcoin's transformation into digital capital make it the foundation of a $20 trillion financial system by 2028? Bitcoin moves fast. Join the conversation in the comments, spread this with your community, and hit subscribe with notifications to ride the next surge.